you woke up this morning and you thought what?
I thought that President Trump has been saying, for almost 2 years now, right, that China's been manipulating and devaluing its currency. You've had the Treasury Department, Mnuchin, mostly, for the most part, come out and when asked, say, nope, not true, not true. And today, maybe it is true. So Trump says it for long enough. China finally says, well, if he's going to keep saying it, we might as well do it.
You think that's what's going on here? I mean, the real question, though, is do we think this is a new line in the sand? Do we think this changes the dynamic materially?
I don't think it changes the dynamic materially. I mean, I think the dynamic has been pretty stable now, to be honest, for almost a year, which is the United States and China both say they want a trade deal, and they're not really getting anywhere. You sometimes get up maybe even close to the line or maybe really close to kind of the beginning of the line, but they're not really getting anywhere. And this idea that China now views 2020, the elections here, it's kind of their line in the sand. We're going to find out if we have Trump for 4 more years or if we can just get past this, maybe is really what they're doing at this point. How many times can Larry Kudlow come on CNBC or other channels and say, we're close, we'll have something or we'll be close to having something by the end of the month. And then the end of the month comes and the whole thing, there's nothing there.
Okay, but let's talk about the sort of political calculus at this point, which is to say, if the stock market continues to drop for, let's say, the next week or two, if not more, does President Trump or Larry Kudlow or Steve Mnuchin or the administration effectively try to come back to the table in a way that they haven't thus far? Meaning,
I don't know.
Could it be
we saw
a forcing mechanism?
It could be, because we kind of, and I have to check the timing on this, we kind of saw this when the stock market, had its swoon a couple months ago. That's when we saw the trade talks theoretically start again. Then we have a ridiculously good July and nothing happens.
Do you buy the election story in terms of who has more leverage before or after an election and the way the Chinese are looking at this?
Look, I'm not inside the head of the Chinese government. In theory, it makes some sense to me. They can obviously, we talk all the time about China as having this much longer term vision from a government perspective than the U.S. can afford to have, right? Because they have a president for life. They don't have to go for re-election every 4 years. So to a certain extent, yeah, they have they feel they can take the pain longer.
Dan, we usually talk to you about deals and IPOs and buyouts and all that good stuff. And you see this, what could be a prolonged chill in the market. At least you see the futures down sharply this morning. And do you automatically think big IPOs that could be put on hold or valuations could come down because of this?
Depending on the company, yeah. I mean, one place I'm definitely seeing in deals is actually in the earlier stage side of the market in venture capital, whereby you have a bunch of Silicon Valley-based firms or kind of quasi-Silicon Valley-based firms that have big, say, Beijing or Shanghai offices. A lot of those firms have started talking a lot more about doing deals in other countries. Firms that raise venture capital funds do half their deals in the U.S., half in China, are now saying half in the U.S., maybe a third in China, and then Latin America or elsewhere in Asia.
Do you think that's changed the valuation story, though, for the startup community?
Not yet. No, the startup story right now in terms of valuations is still, up and to the right. Everybody's got to be a unicorn. I think I saw something that was 3, minted last week. And that's a global thing. It doesn't seem to have had an impact yet. If you can't get $1 billion valuation, you don't seem to matter right now.
A risk-off sentiment, though, in the market will hurt which upcoming IPO most?
Which upcoming IPO? I mean, I think the place where it is going to hurt, I think and it's tricky, any company, we don't have a real great sense of what the calendar is because most of the big IPOs are now going to come post-Labor Day, right? You don't usually want to price into August if you're substantial. So I think we have to look at anybody who really sees China, not as where they're doing a bunch of business now, but where they see their growth potential.
So it's only China-related as opposed to the companies that may be reaching in terms of valuation or there might be concerns about.
Dan, I want to take the other side of that because I'm thinking about Uber. I'm thinking about what took place the week of the Uber IPO, and it was very hard to argue that what was taking place in the markets was necessarily related to Uber or Uber's operational business and what that ultimately did and sort of the chilling effect that it had in terms of people almost even rethinking the valuation. So when you think about a Postmates, which may have nothing to do with some of these international or a we company or WeWork rather, I could see if it's a tough time in the markets, full stop. If it's a risk-off world,
you don't want to
it
pay
almost doesn't matter, right?
But Andrew, on Uber, yeah, Uber priced on a particularly bad day, and given the trade headlines on that particular day. But Lyft, Lyft priced 2 months before that or a month and a half before that, and they and Uber have performed basically the same, ballpark the same in terms of compared to their IPO price. Lyft had a better first day, but it has traded down since then. And Uber's had the last month of, a ridiculous bull market. It still hasn't been able to get back to its IPO price.
Of the IPOs.
In other words, I think it went past trade.
Of the IPOs that you're looking at that you think are going to be bellwethers, if you will, for the fall, which one's the biggie?
WeWork's the big one. I mean, yeah, it's We. I mean, it's the size. It is the fact that it is the the leader in what it does. It is a relatively it's basically a real estate startup. Unlike a tech startup. Yeah, and that's the huge one, and that's the one that investors, both public and private, seem to either love or really hate. There's not much middle ground on We.
There's sort of a Tesla effect of this company in terms of the bulls and the bears on it and the amount of debt actually that's going to be around it. This new idea, originally they were going to try to raise some new debt ahead of the IPO. Now they're going to raise debt contingent on the IPO. How's that going to work, Dan?
No one knows because they've never done it before. They're throwing a bunch of stuff at the wall. And you made the Tesla argument. Somebody who's involved with We told me, and God, maybe 6 months ago, 8 months ago at this point, that when they go public, the expectation even internally at We is they would become the second most shorted stock on Wall Street after Tesla. They're expecting that.